Mr. Chairman, distinguished guests, ladies and gentlemen, good morning. A special warm welcome is given also to those who have visited us from outside Malta. Also salute my predecessor, Mr. Fenech, who during this legislature we intend, we've already spoken, to work closely, especially when it concerns our financial centre. It is with great pleasure that I address you this morning at the opening of the FinanceMalta 6th Annual Conference. Malta has changed this since this organization was established in 2007. We have been through a severe financial crisis, the first stirrings of which became apparent that very year, and now, after the full 6 years on, it's become a severe economic recession and a storm of sovereign debt crisis. Across Europe, countries and their citizens are facing some of the most difficult times ever. Once great economies are struggling, GDP growth across Europe is anemic, with some countries seeing a contraction in output on a frightening scale. The level of unemployment in some of our neighboring countries is frightening too. Looking at Spain, with close to a quarter of its workforce unable to find work, and half of its young people losing hope of earning an independent income. This comes alongside a sovereign debt crisis that threatens the very stability of many of our fellow European countries: Greece, Italy, Spain, Portugal, and now Cyprus. They all have debts much larger than their entire annual economic output. And this is compounded by the problem created by poorly capitalized banks. All this feeds into this so-called perfect storm, one which is extremely complex to deal with. On one hand, the urgent need to drive down the debt to GDP ratio to sustainable levels, which dictates that we cut spending to at least slow the rates at which the debt is growing. However, we all know that the austerity programs have not been the answer. They have failed to pay off for those very countries who have religiously undertaken them. This because they are choking off potential for growth, hitting tax revenues and failing to dent the deficit. Pulling out of the recession requires investment to lay the ground for a rebound in productivity and productive activity. Navigating a sensible path between these two seemingly contradictory poles is a hard and complex task. Malta, no doubt, is a keen observer of these turbulent waters we're in. Our economy continues to grow, although at a moderate rate. Our debt is higher than 60%, but we're committed to as members of the Eurozone. However, we're not yet anywhere near the unsustainable levels seen in Greece, Italy, or many other European countries, and is set to be reduced. The rate of unemployment in Malta is 6.5%. Inflation is under control at 2.4%. Malta does, of course, face big challenges. It would be foolhardy to think otherwise. We have let ourselves become dependent or continue being independent, completely dependent on oil for our energy needs. How much of the employment generated over the past couple of years is precarious employment, part-time employment? How do we account for the fact that we have among the lowest labor participation rates in employment, especially among women? How do we account of the highest rate of early school leavers? How will we deal with the problem of an aging society? In the light of these problems faced by some other European countries, Malta is doing modestly well. In the light of other successful and ambitious countries, however, we need to be more focused if we want to be in their league. The new government is therefore laying out plans to address all these issues head-on. On the energy front, we intend to promote independent private investment in Malta's energy infrastructure in the form of a more efficient natural gas-fired electricity generation plants. To increase the female labour supply, a bold plan to provide free childcare centres for all women for all children will be unveiled in the near future, while ambitious targets are laid out to make a significant cut in the numbers of early school leavers. Also, our pension problem will be addressed in consultation with both the social partners and the financial industry. On the fiscal front, we intend to continue, in spite of a one-time pre-electoral fiscal slippage last year, to consolidate our public finances by 0.6% each year, including this one, so that we not only continue keeping our deficit within the 3% threshold, but aim to reduce this figure until it turns into a surplus. Only this way can we be seriously addressing our national debt problem. In this respect, in the coming weeks, my ministry will be seeking approval in Parliament for the ratification of the Treaty on Stability, Consolidation and Governance in the Economic and Monetary Union, known as the Fiscal Compact. This compact is aimed at tightening fiscal discipline in the Eurozone, as well as tightening economic policy coordination in order to address more effectively the sovereign debt crisis. This very day I would be presenting, in fact, the National Reform Programme, which is part of the economic semester required by this compact. But now, let us look at one factor which has contributed to our success. This is the stability of Malta's banks, which continue to supply sound banking practices and maintained a healthy capital reserve ratio, allowing them to ride the storm that has brought many of their counterparts in other countries to their knees. Let us recognize this. Over the past decades, Malta's banks have consistently maintained good banking practices, which just a short time before made them look dull and unexciting. The result, however, was that they went into the crisis with strong balance sheets, with capital ratios well above the regulatory minima, and strong loans to deposit ratios. This translated into stability for the banks themselves, and importantly for the business that relied upon them for operating credit and thus for the economy as a whole. I think we should say thank you. Throughout this entire storm, Malta's financial service sector has managed to sustain its growth, as evidenced by the trends in the various financial services sectors, to include the funds industry, the various insurance operations, trusts, and to a lesser degree, banking. The list goes on. This begs the question, how has Malta managed to keep its head above water when so many larger, better resourced, and bigger economies saw their fortunes decline? Clearly, this trend did not happen by chance, but rather this is simply a reflection of the growing international trust in Malta as a sound and reputable financial service jurisdiction. The price of getting this wrong, unfortunately, is clear for all to see in the fate of our fellow Mediterranean island Eurozone member state, Cyprus. It is not just the banking sector that underlines Malta's stability, however. The entire financial service sector maintains, for the most part, a high level of integrity and service quality. The sector is well regulated, yet the regulator remains approachable and in touch with the industry. The basic message to us all is that we can easily lose the stability we have enjoyed so far if we depart from these basic principles. The high standard of corporate governance that has led to our relative success in the face of adversity must be maintained. This, at least, is now being recognized by the rating agencies and top news media like Bloomberg and rating agencies like Fitch and Standard & Poor's, who in the span of 1 week, just this past week, each came out with reasoned opinion why Malta's financial centre cannot and should not be compared with that of Cyprus. If there was any doubt of the unfair by a section of the international media, this has been it. Some would have said, why didn't we speak out ourselves? Yes, of course, we could have said it, but the value of independent international observers, their views, is priceless. Thus, it is with great pleasure that I note that this conference will later this morning be looking at the developments in corporate governance and how this affects the way companies and service providers should act. Some of this development is being driven by new regulation. For example, the regulation on bankers' bonuses recently discussed and approved by the European Parliament. Yet the issues of good governance go beyond what can be legislated. Discussions on the best way to compensate financial service operator, investment managers and advisors and other needs to take place within the industry itself and not just between legislators. Navigating our way forward from here will remain a difficult task. The objective is not the maintenance of Malta's prosperity in isolation. In an interconnected world, and even more so in a currency union, full realization of our potential in Malta means that all our neighbours need to build out of crisis as well. The process of reforming the European regulatory regime to help minimize the risk of future crashes is well underway, and Malta is participating actively in the process. This includes the range of new regulations on things like alternative investment fund managers, the new European regulatory structure, and the banking union. Development of new regulation or the refinement of existing rules to make them fit their purpose and achieve aims better cannot and should not be the sole reserve of legislators and regulators. As with the debate on corporate governance and the ethical standards we should expect from the community of financial practitioners, evolution of the rules demands that the industry and broader society should be involved. This comes partly through the formal consultation processes at both the European and domestic levels. This also implies discussion of proposals made by the authorities, as well as new proposals to be put to legislators and regulators, following discussion in forums, bringing together people in industry and in government, such as this one. Besides taking a look at the development of the financial service sector in Malta and what the future may hold for Europe and the Eurozone, I note that you will be looking at the development of an EU banking union. This is but one part of the move towards a more coordinated approach to financial regulation across the different countries within the European Union. The coordination that is necessary counterpart at the completion of a single European market for financial services. Equally, I note that there will be a panel discussion on the opportunities beyond the internal market, which can clearly contribute to the continued profitable growth for our domestic economy. It has been recognized that maintaining a plethora of possibly divergent regulatory regimes across different areas of the increasingly unified market is a recipe guaranteed to produce problems. An inappropriate practice fall out in sight. They will fall out of sight in the gap between the rules. In a globalized economy, this is on a global scale. It is more urgent within a more formal single market like the European Union. Much of the range of new measures introduced since 2008 by the European Commission and Parliament, I know because I've lived through those 4 years, and have moved in that direction. The new regulatory structure for Europe, for example, aims to ensure that national regulators act in a more consistent manner. Proposals for a European banking union go further than that. I will not go into the details of the proposals. You will be hearing and discussing them later this morning. But a banking union goes further than a mere single supervisor. To succeed, it requires a banking resolution and a deposit guarantee mechanism. What I can tell you, however, is that this is no easy job. The politics and the legalities will get involved in the way, and God forbid if we get ensnarled into a treaty change to get to a banking union. How can an EU or even just a Eurozone-wide banking resolution mechanism work to protect depositors from losses due to risks they never subscribed knowingly to, while shielding taxpayers from the excessive liabilities and either effectively recapitalizing or winding down insolvent banks? This is not an easy question. Of course, we'll talk about living wills and other such like solutions, the Volcker rule, and so on. I'm sure you will be debating them today. But, as you know, the rescue deal with Cyprus demonstrated in a very dramatic way how complicated this could be and the ramifications which it can have not only on the Eurozone itself, but globally. that this has to be achievable within some sort of consistency just adds to the complexity of the issue. The dangers of not putting structures in place to achieve this are great. Doing it and getting it wrong presents a whole range of different problems, from prolonged instability, which will undermine shared prosperity for generations, to the destruction of the diversity which makes Europe and the European Union such a potentially dynamic and exciting place to live in and do business. This is why broad engagement in the process of these structures and the rules that will govern them is so important. It is why FinanceMalta's choice to include a discussion of the proposed banking union in today's conference, along with the commitment of individuals and industry groups to participate in consultation and in broader discussion on the issues involved, is so important. In today's complex and interconnected world, a vibrant public sphere is essential to effective governance. In conclusion, Mr. Speaker, Mr. Chairman, I'm getting used to the National Parliament now. We never said that in the European Parliament. In conclusion, getting the structures and infrastructure right, ensuring that they fulfill their roles while not exceeding their brief, and eventually making the whole work effectively, is a project very much in progress. It is one in which Malta will participate fully. It is also one which, along with a policy response that manages to find the right balance between austerity and growth, promises to return not just Malta, but Europe to the road of shared prosperity. Thank you.